Today is 27th of June, and we've not gotten to the end of the month yet. But if you've been following this channel and you had to guess when the eye of the month formed, what would be your guess? Most likely it's going to be the first week of the month. And that's exactly what happened in June. So far, so good. We've seen June giving us the eye of the month on the 2nd of June. And right now, if market does not fall all the way down in the remaining days, we'll be having 24th of June to form the low of the month. Just like I've always said in my past videos, always focus on the first and second week to catch the high of or low of the month, and focus on the last days of the month to catch the reversal. Simple as ABC. Last week, I explained that I was expecting market to come up here, and then if we refuse to go above this line, we will see a flush to the downside, and we got that perfectly. So if you followed last week's forecast, you should have made money following this to the upside and going to the downside. I also mentioned Monday being starved on our table, and I said focus on Monday. If we get the push up here on Monday and you also get a sell here on Monday, take it, because Monday needs to show on our table, and that has happened. So if you are just joining this channel, please just be focused. Let me put it that way. Take note of everything I say, and let's walk along and see how things play out. Then we can keep adjusting things along the way. This week, what do I have? Let's delete all what I've marked there so that we can go to the table. First things first, we need to know when the eye of the month formed, eye of the week formed, and when the low of the week formed. So the eye of the week formed on a Monday, and the low of the week formed on a Friday. So we are quickly going to go to the table to update that. But before we do that, we need to calculate the number of pips that gold did from this high to this low. So this was on a Monday. So okay. So from this high, market dropped all the way to this low and gave a total of 2,600 pips. So 2,600 pips was the move, and let's go update that on our table. Okay, so the low of the week formed on Wednesday, the high of the week formed on Monday, a total of 2,600 pips was delivered. Okay, that's good. Then we need to update this to 12, and we need to update this to 11. If you are just joining this channel, the reason for this number is to show you the number of times Monday has shown since January, the number of times all these days have shown. So far so good. We have Monday showing 12 times, we have Wednesday showing 11 times, and we have Friday showing 14 times. These are the ones that have the highest number of occurrence on the table. And with this being said, we focus on these days to pay attention so that we can take our trades along the line. So if you are to ask me what are the days I'll be paying attention to for this coming week, which is going to be the first week in July, I'll focus on Monday, focus on Wednesday, I'll now focus on Friday, because I know that these numbers are going to crank up. And also, let me also put it to you that the end of this week is going to be the end of the first 6 months of the chart. So if you're going to be analyzing your charts from next week, you should focus on looking at the 6 months, looking at the 6 months chart, or looking at the 3 months chart, because that will be the end of another 3 months and 6 months. So focus on that to pay close attention. Aside this, you should also know that first week in January, the low of the week formed on Monday. First week in February, low of the week formed on the first week formed on Monday also. Then March, Tuesday, April, Monday, May, Monday, and June, Friday. So far so good. We've seen Monday appear on first week like 1, 2, 3, 4 times in 6 months. So giving Monday a high probability of it occurring again just in the coming 6 months that we are approaching. So you need to just study this table. If you can screenshot and study and know how you can work with this data, it will really help you in your technical analysis. So if I'm telling you now that in May I'll be paying attention to Monday, you should know that I have the data backing it up. And since this one is also Monday to Wednesday, I'm going to increase this to 5. So it means for the past 6 months, we've had Monday to Friday occur 5 times, and we've had Monday to Friday, Wednesday occur 5 times. At the end of next week, I'm going to write the low of the month and the high of the month here. You can see it's monthly low, high, monthly high. I'm just saying this for the sake of those that are just joining this channel. So this video might be a longer video compared to the previous ones. All right, I think we've done that. And also, we also pay attention to the number of pips delivered each week. First week, we had 2,290 pips. Second week, 3,380 pips, and so on and so forth. So we can use that to project when to take profits along the week. So this week, an average of 2K pips was delivered. In May, an average of 2K pips too was delivered. So in June, in July, we should also expect an average of 2,000 pips. In fact, since April, we've been having an average of 2,000 pips. So you shouldn't expect more. And if you see more, we play along with what we see and not what we feel. So that's all about that. Let's quickly go to the chart and see what we can expect for the coming week. Okay, so delete this. All right. And so what do we need to go? We need to go to our weekly charts, check what we have on a weekly, see what they are doing, and see how we can react to that. First things first, you need to pay attention to one thing. This eye, which is here, this is the last breakout we had, and I think this breakout happened. I'm using it because I think that's monthly breakouts. Yeah, that's monthly breakout, and that's also 3 months. Okay, it's not 3 months, just monthly breakout. So I can confidently use that. And then we have our last break, which is the first break of a swing low on weekly. So it means we've caged this market. So there's two things that needs to happen. Market needs to come for this low or come for this high. You can, I don't know what you want to choose, but based on the analysis that we are seeing, we are going to know where markets wants to go. So for this, where is our recent breakout? We have our recent breakout here. 2 weeks ago, market failed to close, which was why we saw this push to the upside. But now we can see the market has closed below this low. So meaning that breakout is what? Our direction. So if market gives us any retracement up, we can expect more push to the downside until we start seeing a breakout to the upside, which will be around 4,378. All right. What else can we expect? We have our POI. The first POI is the use a black line. First POI is the fair value gap, and the second POI is the rejection block that we can expect a retracement to before the sell continues to the downside. So this is number one. Number two, but in as much as I'm expecting this to be my POIs, I'm also expecting more push because if I'm to use, I think this is the first time I'll be using my Fibonacci. If I'm to use my Fibonacci from this top to where we got this close, we've not gotten to the premium price to expect sales. So in fact, if you want to be expecting sales, you should be expecting sales around this zone, around this 4419 and above. So this is giving me a little bit of concern, and I'm thinking that even though I have my POIs here, I might see gold push above beyond these POIs to, seek probably 0.382 of the Fibonacci retracement or come beyond. But that's just what I'm seeing on weekly. We need to go into other time frames to be sure of what I'm talking about. So that's that about that. Let's go into the daily time frame to see what it is presenting. So daily is giving us daily give us a bullish RMI, and a bullish RMI is a candlestick pattern for more push to the upside. So if we get a push to the downside, probably to this fair value gap on daily or the rejection block, we can expect a buy from there. So let me mark that out also and see if we can analyze our chart from there. So a bullish candlestick reversal given, and we're expecting, that was why this green candle came. So we can expect more green candles. Okay, let's go into 4 hours and see if you've gotten a break of structure, because so far so good, no break of structure yet on daily. On 4 hours, market got to where we are meant to get our break of structure, but it didn't take the liquidity, let alone breaking the structure. So let's mark that out and see. So the fact that market failed to do that, I think we have a trend line liquidity already. So if this is a trend line liquidity, that means market still has that place at heart. Market still wants to visit this place. Okay, so if market is going to be visiting this place based on 4 hours, we don't have a break of a swing guy yet. But remember, we have breakout on 4 hours. The ones they created and they are taking. So gotten how many breakouts so far? We've gotten, this is our first breakout. I need to change this into this. So this is our first breakout on 4 hours, and this is our second breakout on 4 hours. So we'll be focusing on this, and before we move into the next. So this was the POI we marked on daily. I can do a slight refinement of this into the fair value gap here on 4 hours, and I think I can still do a slight refinement of this maybe when I get to 1 hour, but let's stop there. So it means if you are getting this, when we got this breakout, good give us something like this breakout and give us, came to react at this other block to push the upside. So if gold wants to target this high again, we can also expect something like this to go to the upside. So let's be clear on that because our breakout is to the upside. So let's go to 1 hour and see if we can still do a slight refinement of our POIs before we make our final decision. Okay, if market is coming down here, this is a liquidity that market has not tapped, and market will want to, test it. So I think this can just come slightly below this, and let's push this to this POI. Good, and we can still refine this into this 1 hour fair value gap. So just to have good. There's even liquidity line below this. Okay, 4 hours has given us what we want, 1 hour has given us what we want. So if market falls on Monday, and we see this on Monday, if we see this on Monday, market falling to the downside on Monday or Tuesday, please don't hesitate to take your buy setup from this zone. I don't want to give a number. I would have said this, but it is possible for market to do this or go beyond because this is also a liquidity on 4 hours. So market can decide to come and seek this liquidity, go beyond these lines I've marked, come and seek this liquidity and push. So if you see this happening on Monday or Tuesday, please don't hesitate to take your setup to the upside. Don't hesitate. So put these things in mind. It can either react here to go up or come here to go up. So just focus on your setup along this zone. And the reason I'm saying that is because if market doesn't want to come for this liquidity, it can just come create liquidity and take liquidity before going to the upside. But if it does not create and take, just expect it to come down here and then from here. If this is happening on Monday or Tuesday, please take your buy to the upside. Take your buy to the upside. But if on Monday market opens and you see a breakout of this structure, you see a break of this structure and market is reversing to the downside, and you still see this on Tuesday or Wednesday, don't hesitate to take it. Monday, Tuesday, Wednesdays are very important for gold. So please pay close attention. I won't say more than that. Okay, I think I've exhausted my time. I've used enough time. I don't want this video to be too long, even though I'm trying to be so exact. And yeah, if we start seeing a push to the upside, this should be your first CP, 4150. And if you see more break to the upside, it will come all the way up. So let me just put my line here and see what we can expect. That'll be all I'll be saying for this week. And please don't risk more than you can afford to lose. Trade what you see and not what you feel. And I'll definitely see you guys next week.